Welcome back. We have Siddhartha Khemka now joining in to get a couple of fundamental ideas going. He's, of course, from Motilal Oswal Financial Services. Siddhartha, great to have you on. And happy Friday to you. Of course, all the tariff talk has been dominating headlines, right? Including the steel and aluminum tariffs that US announced ahead of Prime Minister Modi's visit as well. In light of that, I just want to start by getting your take on Hindalco. The numbers came out yesterday, and I think they're more or less in line at the EBITDA per ton level as well. But then you have this whole situation looming in the background, the global tariff piece. What's your call on the stock?
Yeah, good morning and happy Friday as well as happy Valentine's Day to everybody at CNBC and as well as the viewers. I think, yes, if you see the performance has been strong while Novelis performance has been muted, India business has been pretty strong. The key overhang continues to be the tariffs that US imposes. I think Hindalco is much better placed with a lot of production capacity inside US, with Novelis having a large capacity there. So I think it's much more insulated compared to a lot of other European firms. So in that sense, I think our view continues to remain constructive and positive on Hindalco. The India business has been pretty strong, led by higher aluminium prices. Plus, we saw the margins improving both in the downstream EBITDA, if you see, in the downstream aluminium business on account of favorable product mix. Plus, if you see Novelis, I think the volume growth is a bit subdued, marginally lower than our expectation, and the weakness in volume was primarily due to the lower value-added products as well as the automotive shipments. We believe that bearing the overhang, once that gets the air gets clear, and with Hindalco being on the other side, Novelis being on the other side, I think the stock should do well.
And, since Sudarshan briefly mentioned the motorbike, your view on Royal Enfield, the premium bikes, something that doesn't get impacted really by the EV threat. How do you view the stock?
Yeah, hi. Good morning, Nigel. Glad to see you. So if you look at Eicher, I think Royal Enfield does have exports in US, and if the reciprocal tax were to be implemented, then there will definitely be some impact on Eicher. Thankfully, the India business is doing very strong, and we saw the new launches being picked up very well. Within the overall setup, I think the last Q3 numbers that came out a bit weak, with EBITDA margins contracting 190 basis points because of the higher investments in some of the new launches. Management is now clearly focusing on growth and is willing to let go of margins. So that was a bit negative, and the stock reacted negatively. And I think among the two-wheeler companies in India, the highest exposure in terms of exports to US could be a big impact for Eicher. So really cautious in this point of view. But what we saw yesterday or today morning, the visuals coming from US, I think there is a lot of camaraderie that we saw between Trump and Modi, and I think they will iron out a lot of issues with India willing to accommodate the US demands. So in that sense, we'll definitely have to wait and watch. But my sense is that India is willing to lower taxes and accommodate what the US demands are. And hence, we may not receive the kind of reciprocal tax tariffs that a lot of other countries could receive.
Okay. Since it's Friday, let me ask you about some consumer stocks, Siddharth. Starting with Swiggy. Swiggy rallied big time yesterday, right? Because they're now going to be charging a little more from partner restaurants. Do you think this makes an interesting bet, or would you go with Zomato? And then let's talk about the beverages as well. So that's on the food side, or the food delivery side, or quick commerce. On the beverage side, we've had a raft of earnings come in from Alco-Bev companies. Anything that you like?
Yeah, definitely, Swiggy. So I think Swiggy, if they are able to charge higher and improve their profitability, that would be pretty good. But right now, the entire quick commerce industry is facing intense competition, especially from Zepto, which is expanding at a very strong pace. For itself, Swiggy Q3 net loss widened by almost 40%. What we see is that between Swiggy and Zomato, we like Zomato because of its already stable food delivery business, where it is generating a lot of cash. In the quick commerce business, yes, they have upfronted the capex, and because of which the near-term numbers would be a bit under pressure. But still, we believe at the current valuations and the overall business setup, the overall business is profitable, and hence we like Zomato over Swiggy. Swiggy, the path to profitability is still at least 2 years away. FY27 is when we'll see Swiggy reporting profits, and hence we have a neutral rating on Swiggy with a target of 460, while we have a buy rating on Zomato with a target of about 280. Between the beverages, I think United Breweries is an interesting result that came out. Volume was pretty strong, especially in the premium segment. Again, similar thought process where management is looking at market share and volume growth rather than margins. Margins we saw taking a hit. Some of the regions like North, Central, as well as Western regions saw good growth, and I would believe that with the business doing well and the demand being there, we would be positive on United Breweries.
All right. Fair enough, Sid. We'll leave it there. Thank you very much for joining us. Good conversation as always. Mitesh.